Hey, what is going on, you guys? This is Trading Ape here with a brand new video and a brand new interview for you guys today. Now, today we did have an interview with Endrit Cela from Investment Babo, but like always, before we do get any further, though, I'm not a financial advisor. If you guys do want to join this Discord, link will be down below in the description, as well as my TikTok, Twitter, and Instagram. So, other than that, you guys, pretty much, we did have an amazing interview with Endrit Cela from Investment Babo. I will be linking his YouTube down below in the description. Previously, last month, we had an interview with Steve Reiners, CEO of AITX. This month, we have it with the fund manager, Endrit Cela. Really, really amazing interview. I was kind of bearish on the market, but after this interview, I saw a whole new perspective. Not too bullish, but not too bearish. Kind of like more of risk management. And we do touch upon a lot of topics going from the tech sector to the airline sector to the reopening stocks to kind of like investing, like ways of investing, different types of like companies to look out for, and kind of like inflation. We do touch upon that, and as well as crypto. There's lots of topics that we did touch upon this kind of interview and all that stuff. So really, really amazing stuff. I hope you guys do enjoy, and here you guys go. Yeah, pretty much that's the whole tech sector. It's kind of been going pretty bad. But where do you see the market heading towards the next few weeks or months coming within the next year?
Right. So the market, that's a pretty general question, right? Every time we talk
Yeah,
about the market, it's good to differentiate, but let's stick to the tech sector. And one of the reasons why the tech sector is doing pretty bad is because of the 10-year treasury, right? Because the yields have gone up, and if we look at last year, we had actually a pretty high drop, a significant drop in the 10-year treasuries. And this year, they've gone up by 75%. So percentually speaking, 75%. They're at 1.63 right now. And what does that mean? A lot of these tech companies, right? A lot of these tech companies have to refinance themselves because, well, they don't have the best balance sheets in the world. They're not actually writing profits. They're highly in debt. So obviously, if the treasuries are going up, that means that refinancing can be quite expensive. So that's why if we look at the Nasdaq 100, last year it had a performance of almost 48%. That's phenomenal. This year only 4.5%. It's all right, but that mainly has to do everything with the 10-year treasuries. And I'm pretty sure that the central banks are going to do something about this. You know, they're going to bring the 10-year treasuries down, but the treasuries are up because of inflation, because inflation is up at 4.2%, and there's a lot of fear in the market right now. But I wouldn't be too worried about that, to be honest with you, because I think over the next year and over the next 5 to 10 years, maybe even next 20, 30 years, we're looking at a zero interest rate policy and probably at a negative interest rate policy. So it's just a matter of time, but it's only normal that we have inflation right now because with corona and everything, everyone's been at home, not spending money on vacation and so on and so forth, and everyone's getting back in the game. And a lot of people have been saving money, so there is money there to spend. And if everyone's going through the same door, that's going to lead to panic. That's going to lead to inflation, and we're seeing that. We're seeing that, and we're probably going to see a little bit more throughout the summer.
Yeah. So like well, kind of right now about inflation, since you did touch up on that. Do you think that inflation is a lot worse than what they're actually reporting? Because if you take a look at lumber prices, they've shot up, other building material prices,
Right.
crops itself. So do you think inflation is a lot worse than what is actually being reported?
I do think that inflation should be measured differently. So yes, to answer your question that way, I think there's a lot of other things that should be included in the inflation in the CPI measurement. So I do agree with you. We should look at the real estate market more closely. We should look at the building materials. We should look at the wood. The price of wood has gone up. Exponentially. So there's a lot of other factors that are being ignored right now. So I think inflation is higher than what we're actually seeing right now. And I think it's just a matter of time. But there's also a lot of other indicators out there, especially out here in Germany. As you know, I live out here in Frankfurt. We have a few institutes that measure inflation differently, and they're showing significantly higher inflation rates.
Yeah, yeah. So like in order to play inflation, like there's gold, silver, stuff like that, those other prices that you can hedge with inflation. Do you think that that would be one of the biggest winners throughout this period to come within the next few months due to
I,
inflation?
I, In general, I do think you should be diversified. Gold and silver. I'm a big silver fan because silver has two components to it. It's an industrial metal, but it's also a hedge against inflation. It's also a hedge against the currency being devalued. So yes, but we've seen inflation go up, and we've seen interest rates. So we're talking about the interest rates from the central banks actually remain at zero, and gold is actually at around 1800. It's not really moving that much. So there's a lot of potential there. I agree with you, but I can't really say if that's gonna pick up anytime soon. So if you're willing to invest 5 to 10%, that's all right. But I wouldn't do anything more than that in gold and silver.
Yeah, yeah, definitely. And so now as for like the general market and inflation itself, do you think that we can probably see some type of huge panic sell-off due to inflation numbers? I mean, last time that they came out, they were a lot higher than we expected, and we
Hmm.
did see the market react pretty badly to that. And we're starting to see inflation fears rise again as the new CPI numbers come out for
Right,
next
right.
month. So,
Well, I'd like to look at what the fund managers are doing. We're fund managers ourselves, so I'd like to look at where the money is headed. As a good detective, you're always supposed to, ask where is the money at. In whose interest is it for this crime to happen? And it's kind of the same on the capital markets. Regardless of what Bloomberg and CNBC and Jim Cramer and everyone else is saying, I'd like to look at where the money is headed. And right now, a lot of investors, a lot of institutional investors, so big pensions, big pension funds, insurance companies, and so on and so forth, investment banks, they're actually quite bullish, and they have priced in inflation. Inflation is priced in, even 5%, 5.5% is priced in, but they're also pricing in a lot of growth. The question is which part of the stock market is going to profit from this. So that's why I don't like to talk about the stock market in general. As a stock picker, there's always good opportunities. You know that. Even in bad times and good times, there's always great opportunities. So there's a lot of good opportunities in consumer staples, right? Because if inflation is picking up, there are certain items that people are still going to keep buying, right? So
yeah.
that's why you might want to look at these kinds of stocks. Unilever is, for example, a very, very good company, or Anheuser-Busch, Abi InBev, or I think I just pronounced that in German, but these are some of the interesting companies that could profit from a little bit of an inflation. Obviously, I don't see any kind of hyperinflation coming into play because there's just a lot of help from the central banks right now, and it's also in their interest that we do not enter any kind of significant recession anytime soon.
Yeah, yeah, definitely. So, would you also say though that the market is a little bit overbought? Would you consider yourself more of a bear or a bull towards this market that we have currently?
Currently, I would say certain parts of the market, certain segments of the market, especially the tech sector, is a little overvalued. But you also have to price in some of the growth. There's some great companies out there. So when I look at Alphabet and Amazon and Apple, I would certainly say they might be a little overpriced, but that's certainly not any reason for me to sell these companies. I'm just going to ride out the wave. There's going to be volatility, and that's all right because I'm a long-term investor. I just use these opportunities to buy more. And the less I try to time the market, the more successful I am long term. But a lot of people, a lot of day traders will try to take in the daily movements. It might work for some of us that are doing this full time, but I know for a fact that many of the day traders out there are doing this as a hobby. And
Yeah.
unfortunately, you have to spend a little bit more time into day trading if you really want to be successful long term. But there are other parts of the market that are entirely undervalued, and these are some of the cyclical companies, some of the more value cyclical companies, and they're picking up. And if we look at the fund manager surveys out of the United States of America, the Merrill Lynch Bank of America fund manager surveys, we'll see that a lot of fund managers are positioning themselves in these sectors particularly because there really is no alternative to the stock market. So in general, I would say, okay, maybe the bond market might be a good alternative, but even if the 10-year treasuries hit 2%, even if they hit 3%, long term, that's not really any kind of alternative that's worth looking at least in my opinion.
Yeah, yeah. So you did mention that there's also other markets there. What would you consider yourself in the crypto market? More of a bear or a bull in there? Because that
Well,
one has been pumped crazy.
that has been pumped crazy, and I would go as far as to say pump and dump.
Yeah.
We actually did a really nice episode. It was in German, obviously, so some of your English speaking audience might not understand that. But we did talk about Elon Musk and how he played a significant role in Bitcoin hitting the new highs, and on the other side, Bitcoin going down by 20, 30, 40%. So I'm not a big fan of Bitcoin, to be honest with you. I'm not a big fan of the crypto market. I'm actually known to say that it's a modern Ponzi scheme, but hey, that's my opinion.
Yeah.
But if you do want to invest in these markets, I really would suggest minimal exposure, so that it doesn't hurt too much when it goes down by 30, 40, 50%. Because in theory, a lot of us could say buy the dip, and a lot of us would say just invest long term, just put some money in there and just leave it in there for 10 years. But it's easier said than done. Let's just be honest here. And as far as an investor, I am a value investor. I like to value companies. I like to look at their business models. There's nothing to value as far as Bitcoin goes. So that's really all I have to say to that. And I'm just going to be honest here and say, we as an investment firm, we're not invested. We're not even allowed to invest in Bitcoin. And me as a private person, I'm not invested either, because I have better options. I have companies that I can actually evaluate, companies and business models that I can evaluate. I can look at the management team and I can make a decision based on real assets. And as far as Bitcoin goes, I can't really do that as of now. As far as blockchain technology goes, all I have to say is, yes, it is the future, and I'm excited for that future. And I'm excited to invest in the companies of these future that will use blockchain technology in such a way to change our world, but will also consistently make money, because that's what I look at when I invest. I look at companies that consistently make money. Consistency is very important. Also, in one's private life, it's the most important thing. So as far as Bitcoin goes, that's really all I have to say about that. I can't really help much. It's really interesting what we're seeing, though. It could be worth it, buy the dip, make 20, 30, 40, 50%, but you should have an exit strategy.
Yeah, yeah, definitely agree with you on that. But so now kind of in the general sense of the market, which I know you don't really like to talk about general because there's value stocks, there's growth,
Right.
tech, stuff like that. So, but currently the Buffett indicator, I don't know if you're familiar with
Of
that.
course.
Yeah, they're saying that currently the ratio between the market and the US GDP
Hmm.
is over 200 and like 20% or something like that, and we're overvalued from the long-term trend line about
Yeah.
like 79%. Would you see those numbers being concerning as for the Buffett indicator?
Well, obviously, a lot has changed as the Buffett indicator has evolved, or actually, it hasn't evolved as the market has evolved. And one of the things that makes this entirely different than it did 20, 30, 40 years ago, when the Buffett indicator made a lot more sense, is the interest rates. So, and that's one of the main issues that we have. We're talking about zero interest rates that makes it a lot easier for companies to refinance on the capital market. So even Buffett isn't too worried about his own indicator, after all, because Buffett does have a quite high exposure. We did have the annual meeting this year digitally from Los Angeles, I believe, and he wasn't all too concerned. But like I said, it's as a stock picker, you're not really concerned about these issues, because you're not generally invested in an S&P 500 ETF that basically has every kind of company in there. You have your own opinion on certain sectors. You have your own opinion on certain small caps, mid caps, and large caps, and according to your view of things, you put these kind of stocks in your portfolio, and you can even make a good performance in in recession times. So that's my answer. Certain sectors are definitely overvalued. We've seen, and not just the tech sector, but hydrogen stocks are a lot of different companies, especially coming out of China as well. China is interesting, but not everything in China is fairly valued. So I would be very careful before saying in general that the Buffett indicator is definitely right. It's an interesting indicator, but I do think it's a little bit, I guess you can say old-fashioned, and it doesn't really fit, the general consensus on the market right now, especially regarding interest rates. And that's the biggest thing that we have to consider, especially when we're valuing companies nowadays.
Yeah, would you also consider retail traders being a part of kind of this huge rally that we've had in the past,
Oh,
like for
definitely,
S&P?
definitely. Definitely, it's one of the biggest. I guess you could say issues as well. I'm trying to push, the stock, the equities culture. I want people to invest and to invest long term. That's basically one of my main goals as an investor here in Germany. And I would say that the investing culture in America is a lot further ahead than here in Germany. But if we look at the statistics, we had 28% new investors last year in Germany. So that's around 3.5 million new investors. And I've talked to a lot of them, obviously not to all 3 million, but I
Yeah.
do have a lot of presentations. So I probably spoken to over 10 or 15,000 people just last year. And everyone is basically, yeah, just buying based on the fact that, hey, the prices are going up. And that's dangerous. Even Buffett says you don't buy a stock because it goes up. You buy it because you believe in the business model, because you believe in this company's future, because it's a part of your life. Look at Apple. It's a part of our life. We're using their products on a daily basis. And I think that a lot of these private investors are investing for the wrong reasons. And unfortunately, I think that's going to be one of the key issues why we might have a big correction, in the next 12 to 18 months. Because when we see some volatility in, somewhere around 10 to 15, 20%, a lot of people are just going to sell their stocks and they're going to trigger a bigger avalanche, and that's one of the key issues that I'm looking at, because it's not just a few thousand people that we're talking about. We're talking about, many, many millions of new investors that are not well informed. And that's a problem. In general, that's a big problem.
Yeah, yeah. So, would you consider yourself more of like an investor for like value or growth because you believe in a company? For
Mhm.
example, like Tesla, I know a lot of people are in there because they believe in the business model they have. Or would you consider yourself more of like a conservative kind of safe
Mhm.
investor into like Apple or Google, Alliance Bernstein, stuff like that?
Well, I would consider myself as a modern value investor. We do like growth in our companies, and if we look at Apple, there is consistent growth, so there's no stagnation. But we're not looking at growth in the sense of Tesla. We're not looking at revenues going up by 60, 70, or 100 or 150% anytime soon. So I like stability, but I do like opportunities as well. And there are some hidden gems all around the world. Some companies that people just don't know because of geography, because they might be in New Zealand, they might be in Australia, they might be in China, or they might be in some smaller countries in Europe. So in that sense, I do like taking advantage of opportunities, but at the end of the day, when I am looking at a company, I do need some kind of consistency over a 5 year course. So I do like to look at the last 5 to 10 years, and I like to look at two things. I like to look at net profits, so cash flows, and I like to look at revenues. And if I'm looking at revenues going up from 10 to 15 to 20% on a regular basis, that's a good sign. And if I'm looking at cash flows, anywhere from 10 to 12 to 13, 14, 15%, that's a great sign. And it's a sign that these companies are doing something right. It's a sign that people are using these products on a regular basis. It's also a sign that this company is investing in research and development, and it's also a sign that they have good management. So these are basically four of the criteria that I love to look at. And not a whole lot of companies fulfill these criterias. But if I look at my investing universe right now, it's about 200 to 250 right now that fulfill these criteria. And obviously, I can't invest in them all, because you have to take the time to follow what's going on with these companies. And that's one of the things that you just have to be honest. So as far as my private portfolio goes, I have about 10 to 15 stocks right now, so I am highly concentrated. But a well diversified portfolio, if you don't really have the time to get to know the companies, it should be around 20 to 30 companies in your portfolio.
Yeah, yeah. So, what is your biggest holding that you do have in your private portfolio?
Well,
Or you
I
can't
can't.
speak.
Generally speaking, I can't talk about it, but I
Ah,
will. I will mention it because I don't think anyone really knows this company. It's a holdings company based in Munich, Germany. It's called Mutares. It's a small cap, and they invest basically, in infrastructure, logistics in Europe. So basically, I guess you could say it's a private equity company, but it's not. They take a lot of old rundown companies, refurbish them, and sell them for a higher price, and they've been doing a very, very good job. And it's not a tech company, but I still made over 200% ever since I invested, and that was last year, and right now it's become my biggest position. And besides the stocks that I have in my portfolio, obviously I have my own investment funds in there, for the company that I work for.
Yeah.
And so, not including those, I have around 10 to 15 stocks right now in my portfolio.
All right. All right. Yeah,
But you can look into that. Mutares, Mutares, based in Munich. They have some interesting companies in their portfolio. It's a holdings company just like Berkshire Hathaway, but it's a hell of a lot smaller. They have a market cap of around 150 million. So right, it's peanuts, but it has a lot of potential. So like I said, I'd like to invest. I have a Alibaba, Apple, and all the good stuff in my portfolio, but this is a company where I see a lot of potential.
Yeah, yeah, I see the company now. Mutaris, yeah.
Yeah.
All right. Yeah, that seems nice. Um, so yeah, would you also like what about like the small cap sector? Because we've seen the Russell 2000 just
Right.
completely skyrocket over the last year. Would you consider that as now becoming bearish pretty soon, or do you still see consistent growth in the penny stock sector or the low cap, I should say, low cap
It's
sector?
it's all about the business models. So there's small caps that are equally as good as Apple. Is just they're a lot smaller. So even in the small caps, just because the market capitalization is small, it doesn't mean that they don't have great business models. I can give one example of a company that we have in our portfolio here at Shareholder Value Management in Germany. It's called Secunet, and it's a small cap. It's kind of like Mutaris, but now they're a little bit bigger. But they started off with a market cap of around 150 million when we invested in them, and they're about actually they're a whole lot bigger right now. But we made 100-fold, so it's one of our 100 baggers. And it's still a small cap because it has a market cap of 1.5 billion euros. So we're not talking about anything big, but their business model, cybersecurity, their biggest client here is the German government, or the German airports. So they have a great business model. They have an economic moat, right? Morningstar talks about moats, and moats are very important. It's the answer to the question whether a company is really sustainable, right? Over the next 5 to 10 years, can they make money and profits, and what is their economic advantage over their competitors? So once again, and I think you notice the pattern here, it's hard for me to ever generalize anything
Yeah.
because there's an exception to every rule. But small caps in general, if you're looking at the index, they're being bought up because they were highly undervalued. So obviously here, I think we have a good time frame of another 6 to 12 months where I believe small caps will remain relevant, and then it's about stock picking.
Yeah, yeah. So, as you were saying again, like with the general basis, like you can't really speak too much on that because there's an exception. Would you consider travel stocks being one of the biggest winners now as the summer months come and restrictions lessen?
I definitely think there's a lot of potential in there, and there are some companies that they have a good setup. They managed to survive the Corona crisis. So I think there's some good airline stocks as well, and some good travel stocks. Like I don't really have any good examples right now, to be
Me
honest with you.
neither.
But
It's
okay, as far as airline companies, like I would look more at the European companies because the European market in general is also a little bit undervalued compared to the American market. So I would think of Lufthansa right away, or Ryanair. These are two companies that I've looked at in the past, that I've been invested in the past, and these are two companies that are showing signs of life again. And Lufthansa, I do have some issues. They do have a little bit of a government bias, if you will. They did get a lot of money from the government, and every time the government owns a piece of the company, you're kind of worried as a shareholder because the government isn't usually the best manager for for a company. So in general, yes, there is potential, but once again, stock picking and two things like I said, Ryanair and Lufthansa are definitely two companies that I think could be potentially interesting. But once again, I can't give that out as a piece of advice. So you should obviously be doing your own homework and see if there's potential in these companies. But even companies like Royal Caribbean, right, like the whole cruise lines, they could be interesting, But it's something that for us as investors, it was never actually interesting. Only the price is interesting right now, but the business model, as far as sustainability goes, that was really never interesting. The amount of oil that they consume and blah 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 and so on and
Yeah,
so forth.
that's
It's not sustainable. So that's something that we definitely have to look at as professional investors.
yeah, yeah. So, do you guys also, besides fundamentals only, do you guys also look at technical analysis in a main way? Because we did see Nasdaq kind of break that
Hmm.
momentum play that they did have over the last year, and now we're seeing it kind of head down towards a bear market. Do you guys use technical analysis at all, or?
We use technical analysis for short-term hedging, but it's not really the main part of our, what we do over here. But we like to look at moving averages as well. And there's a lot of technical charts or technical indicators that we've developed as well that are in-house indicators that have shown, an accuracy rate of around 50 to 60%. And when it comes to technical analysis, that is highly successful, but nonetheless, it's not something that we like to use on a regular basis because we're long-term investors. We have a long-term bias as far as stocks go, and over the long-term period, the next 5 to 10 years, we're not really worried about the stock market. But if we can reduce the volatility for our clients, great, right? So we do use technical analysis as well.
And all right, well, yeah. So that's pretty much it. I don't have any other main questions for that. But what would be the best advice you would give a trader or investor?
Well,
Like,
to obviously listen to your channel because you're doing a great job. You're asking the right questions. But moreover, just really do your homework. Take your time. It's not about rushing into things. It's not about fear of missing out. You're not missing out anything. All right. It's a long term game. It's a marathon. The stock market is not a sprint, and that's really all I have to say. Really take your time, get informed, well informed, and if you don't feel like you're well informed, then don't invest or let someone else do it for you. Get a financial advisor. There's plenty of financial advisors out there that will help you and will be alongside and manage your money because a lot of people are actually making the wrong decisions and they're selling at the wrong time. They're buying at the wrong time. So that's really all I have to say about that. And if you're investing, please invest long term.
yeah,
That timing is your enemy. I always say this: timing is your enemy, but time is your friend. And is it a good time to invest in the stock market? Every day is a good time to invest in the stock market. As long as you're bringing time. But if you're trying to time the market, it's
that's more scary in a way. Yeah,
well, if that's part of your business model, it's fine, right? But we're talking about the average Joes here. Not everyone can be a day trader, but
yeah, yeah.
obviously that's what everyone's trying to do. So that's my advice coming out of Germany.
All right, yeah. So, all right. Well, thank you so much as well.
You're welcome, man. It was a pleasure. We should do this
Yeah,
more often.
we should, yeah. I will link your YouTube as well, the Investment Babo thing as well. I will link it down below. And yeah, so thank you so much. It was great. It was nice having you.
Yep, pleasure being here. Take care, guys.